Okay, we're keeping a really close eye on the price for oil this morning. And with that, we're going over to Mike Apple. Good morning to you, my friend.
Yeah, good morning, Melanie. A lot's been made about the price of the pumps going up overnight because of the federal carbon tax. But when you look at it, it comes back to what we're actually seeing in the energy market with the price for oil in the first 3 months of this year, first quarter, biggest quarterly gain in a decade for the price for crude, up 32%. We've heard about cutbacks from OPEC and increased demand globally. China's economy doing better again after they cut taxes earlier this year. We saw a surge in manufacturing output in the latest monthly survey out of China. So all of this leading to higher energy prices for the commodities, and that ripples through to the retail price at the gas pumps. And then, of course, we do have to add in the federal carbon tax taking effect this morning, putting it up by another 4 cents per liter. So we'll be tracking this over the course of the week and see if there's even more price increases to come to fill up the gas tank. Now, stock markets had a very strong first quarter of the year on the expectation that actually interest rates aren't going anywhere anytime soon, holding steady, while the economy globally is growing moderately, sort of a best of both worlds scenario for investors. The TSX had its best first quarter in 19 years, gaining more than 12%. And the Wall Street markets had their best first quarter in a decade, most of them up by better than 10%. And already this morning we're seeing the Dow Futures Index up by more than 180 points. Strong start for the morning markets. Now, what has been one of the best performing sectors on Bay Street? Well, we've got the opening of the first of what is expected to be many retail locations in this province for cannabis sales. And those pot stocks were high flyers in the first quarter, as the expectation is that these companies at some point are going to be making a lot of money. They're not doing so yet. Most of them are money losers still, and the revenue generation has been very small. But you look at some of the stock performances just over the past 3 months, the biggest of the group, Canopy Growth, up 58%. Kronos Group actually has been down recently just because of its recent earnings update, but still up by more than 70% year to date. So we're looking at that. The other sectors of the market that had a very strong start to the year so far, bank stocks, the energy producers, that group of share prices have been very strong. And we've also seen shares in the energy trade benefit from a rising price for oil. And Roger, on Friday last week, we had the debut of Lyft. It was kind of interesting to see how the second biggest ride-hailing company came into the market. They had a higher price point to start with at $72 per share, but only went up by 8% in the first trading day. So sometimes we see those tech stocks just, yeah, I know.
People only made 8% in one day.
Only 8%? What? How is that possible? But no, these companies, you know, it's a slow build process, and maybe people are kind of looking at others that came out and said we have no prospects of making money in the near term. I seem to remember Snap saying something like that back a few years back, and of course that stock did nothing but lose investor money. So maybe people are being a little bit more cautious, shall we say?
I'm not surprised by that. I mean, you know, Warren Buffett made his money on long-term blue chip, right? That's
true. And companies that make money and buy, well, he's one of these buy what he knows. So he owns, you know, companies like Dairy Queen and Apple and all sorts of other things.
Can't argue with his success, right?
That's right.
All right, Mike, thank you very much, sir.
Thank
Have a great day.
You too.